Well, moving on then, we are bullish as a bank on growth opportunities in the credit card space, says Parag Rao. By the way, before we move on, I request the ladies to stay on. We'll ask you more queries. But Parag Rao, the group head of payments and consumer finance at HDFC Bank, spoke to my colleague Ritu Singh. And he also said that the RBI action on unsecured loans are a good, prudent measure. Listen in to a slice of that conversation before we return with more queries.
For a growing economy, I think credit is important, very important to sort of, it's a lifeline for growth. Okay, and I think what was necessary in a diverse country like India was a platform which helped lenders to get onboarded, okay, get access to customers in a simple, protocoled way, get access to relevant kind of information which helps you underwrite on the side. And of course, I think the regulated entities would need to also work on building their algorithms to underwrite digitally, so on and so forth. So I think that's a starting step, and I would choose to call this digital public infrastructure, as in line with the other digital infrastructure which have been built up. So I think and that's a big thing. If you've seen the progress of UPI is an example of digital public infrastructure which has opened up the floodgates of expanding digital transactions. The belief is this platform will also do the same thing for credit, and so I think it's a good thing. It's early days as regulated entities and banks start changing or working on their protocols to sort of onboard. You'll start seeing, I think, progress building up. But I think it's a good thing which has happened.
Could you give us a sense of, in the credit card space, for instance, how are spends increasing, the cards in force, etc. You've, of course, been able to gain your market share, in the period since the RBI action. But, now if that sustains and, what's driving the growth?
Well, we are bullish as a bank on the growth opportunities in the credit card space. I've said this before, that I think this whole UPI base is sort of a precursor to creating a large pool of customers who are used to transactions. At the current rate on UPI, it's a direct to account. But then credit cards have always been a sort of aspirational product as the next step once you sort of get onto the base level of transactions, primarily because of the rewards and the credit period, and of course the good image which credit cards have. So you have today 400 million odd customers doing 14 billion transactions a month, and these customers are ripe for taking the next product, of course in phases, and as a result of which, even if you see in the last 2 to 3 years, you've seen a good steady growth of credit card numbers, and of course spends growing on and on. We do believe that all form factors will continue growing. Credit will also get the benefit of this huge pool of customers which are only going to grow. UPI itself, while today it's at 400 million active customers, I think the next plan is to really look at the next milestone of probably 1 billion, 1 billion customers on board. And so therefore, I think the headwinds for growth on the credit card business are really good. We're a dominant player in this space. We have the distribution, we have the underwriting capability, I do believe we have good products, and we'll continue working on that. The idea is to obviously continue being dominant in this space.
Sure. While you are a dominant player, the recent action from RBI on increasing the risk weights for unsecured lending, we've seen that, sort of slow down the credit card growth across banks, and because of some of the retail stress rise that they're seeing in that portfolio. What about HDFC Bank? Are you going to go more calibrated on that front as well?
So we look at, in an asset product, every couple of years you see a cycle. You see a cycle of growth, and then there's a cycle of correction, if you may call so. That's typical to this product category. Measures like these, which only the way we look at it is, I think only, and I'll talk about the bank what we do, but measures like this, in our belief, I think are good, prudent measures. I'll tell you, in a high growth economy, okay, it's very easy to sort of start disbursing loans and etc. Okay, and in our learning, I think the thumb rule we ought to do is when the times are good is when you make the most mistakes. Okay, so you've got to be, in fact, even more prudent and careful in times of growth. This is a good time of growth, and some of the measures I think are to ensure that there is calibrated growth in the asset space, not meteoric growth. I think that's only good for the industry. No one likes bubbles. Okay, so I think so this measure, I think, on the RBI, I think, is timely and good for all the players. And so to the extent that growth is now calibrated, I think it's good. We always, as a bank, followed a very calibrated approach, a measured approach to this thing. During good times, we didn't spurt up. During bad times, neither did we clamp down. We've always been steady. That's been our learning in this space, and that's the reason why we've always had, I think, the credit performance of all our portfolios, I think, probably the best in the industry. So we continue our strategy. For us, it's no difference. It's no difference. We continue in our calibrated measure. We pick and choose our customers well. We want to be a long-standing player in the asset space and probably the most profitable, and we'll continue doing that.